Recording going. Yeah, so welcome to Financing a Business, Understanding Your Funding Options. We have Ramesh Advani. He is a Boston Business Mentor volunteer, and we're thrilled to have him presenting for us today. So, from Ramesh, if you could go to that next, thank you. We're going to talk a little bit about Boston Business Mentors super quick, and we'll get this going. If you don't already have a mentor, get a mentor. Mentors are so important to helping you reach your goals and overcome challenges. Mentors can serve multiple functions for you. They can be a sounding board. They can be, help you find resources. They can help you put together a plan to achieve those goals. They can work for you and assist you in many, many different ways. Don't forget about our workshops. Keep an eye open for new ones being added all the time. I added a brand new one that's going to be in 2 weeks. So watch for that. If you're interested in funding and financing businesses, I have two more webinars coming up. So, one is posted and the second one hasn't quite posted yet, but they're going to be getting a little deeper dive into a few different things. The one that is already posted is going to be focusing on SBA loans and what loan officers are looking for in a little bit more in depth than what we are going to go into here today. But keep an eye out for those. And certainly don't forget on our website, lots of blogs and podcasts and resources you can download. Really lots of great, wonderful information. So with no further ado, I'm going to go ahead and introduce and let Ramesh take over. Ramesh?
Okay, thank you, Teresa. And hi, everybody. Good afternoon. Um, I'm sorry, I like to do presentations where you are going to look at things which look slick and professional, but for some reason, Zoom is acting funny with me today. Um, so I am going to go through, I have lots of different slides, but before we even get started, I just want to say something. Uh, Everybody is always worried and looking for money. And I like to just give a general overall comment, nothing to do with funding or money, that I think you should all pay. If you take nothing away from what I'm saying, if you remember this, it'll be the most important thing you will have gotten. There is money available no matter what. If you roll your eyes when I'm saying that there's lots of money available and there are lots of ways of getting money, the difficulty is, in order for anybody to open up their purse, whether it's an investor or a financier or a bank, the most important thing they need is to know two things. One, can they trust you? And second, are they going to get a return on their money? And if those two questions are answered very well for them, while you're approaching them and you answer these questions, they're not going to tell you these are the two questions in my mind. They'll ask you about your business plan, your forecast, your product or your service. But the real question is, hey, I'm trying to shake your tree and get 100 grand from you. I want to get 50,000. I want to get even 5,000. How can they be sure that they're not throwing good money away? So if you keep that in mind, when I go through all of this and tell you what our objectives are, and I'm going to go through what are the ways in which you start a business, and then go through different forms of financing. And what I'm going to do is, when we go through, for example, um, owner financing, I'll pause, and if you have any questions, please put them in the chat, and I'll ask Teresa to help us out, since she is our moderator for the meeting, and I'll be happy to answer the questions. Now, you might think you're getting a lot of information. Don't try to take 9 million notes about that. We'll be happy to share the slides with you. There'll be lots of examples of sources of the ecosystem financing, lots of information regarding debt financing. But just keep in mind, I may go a little fast through some of the slides, but it's important that you get the general picture. Again, remember, it's very important that you realize that there is money available in the economy, and it is a very American thing to help support entrepreneurs to drive the people who are going to make our economy successful. And the most successful or the largest group of entrepreneurs are small business entrepreneurs. So if you're here listening to this webinar and you're one of them, just remember there are ways of getting money. Now, one other thing, just in terms of the mechanics, once we are done, if you want to set up time with any of the Boston Business mentors who understand finances and numbers, or myself, we'd be happy to have a session set up where we do mentoring and you share information privately. It doesn't have to be confidential information that you're just sharing broadly with everybody. So just keep that in mind. You can access us at any time. So let me get going. The objective of this workshop is to explain in plain language everything you need to know about how you can fund your startup or how you can get funding, which is your small business, which is not in the startup phase, but has gone to the next level. It's also important that you understand all the funding terminology and the options that you should know. You should know this in the back of your hand and understand it. So that's what I'm hoping we get out of this workshop that I'm doing for you. So let's start at the very basics. Why are we talking about financing? Does your business need financing? Well, your business always needs financing. You may need financing at startup. You might need financing during your growth phase. You might be interested in expanding, and you want to buy real estate. You might want to, let's say you're making a product, you want to purchase equipment, or you need to be funding your working capital. Working capital, your inventory, or you've got receivables and your receivables are tied up, but you need cash. So the entire life cycle of your business, you're always going to have financing at the back of your mind. Now, if you are a successful business, your business should be making enough profit so that the business can put money into your pocket or send dividends to your investors. But for the business should grow, the business itself should be generating cash to fund itself. It's only when the business is not generating enough cash to fund itself, that's when you go around looking for financing. Or if you want to get money faster than the cash flow that is being put out by the business. If you go down the path where you're constantly every year looking for financing, you're actually losing money. And I would say then that's a different kind of a conversation we need to have. But I just want to tell you at a very high level, these are the different areas in which you go out looking for financing. Now, let's just start with a startup. Let's say you've got a great idea and you want to implement it. There are three ways to start a business. And it's important to understand that. One is you can start from scratch. The second is somebody already is in that business and they want to retire or they don't want to do it, but you want to do it, so you can buy an existing business. And of course, the third is you can license a brand or a business, and that's franchising. So there are three different ways to start a business. And once you've decided what you're doing, then we'll go around thinking and talking about the funding. So let's take this one at a time. And I want to just spell out some advantages and disadvantages of each of those three ways. So let's say you're starting from scratch. I'm going to verbalize the disadvantages that you see here. So these are the obstacles or the roadblocks that you have to think about. The advantages are something that'll automatically come to your mind. You're going to keep all the profits, you're going to make all the decisions, you're in full control. But the disadvantages are what I want you to keep in mind about this particular way of starting a business. You will have to create the systems. It also, this way of starting a business has the highest failure rate. And it might be years before you actually make a profit. And your financing options may be limited. So just keep in mind these are the disadvantages related to starting from scratch. So, okay, you're not starting from scratch. You're going to take an existing business and buy it. That may appear to be a little easier, but that also has disadvantages. As you're evaluating the existing business, you have to figure out and make sure that the current owner shares with you what is the real cash flow. You also have to figure out why is the seller selling the business? What are some hidden motives? Is it because the competition has gone up? It could be something simple as they just want to retire. They've made money, they are tired. But if it is something deeper and more devious, you have to figure that out. When you buy an existing business and if there are employees, the employees may be very happy with the current ownership and they're going to be dealing with an unknown quantity. They might say, I'm going to look for another job. You might have employee defection. And the last disadvantage is the company may not be making enough profit or any profit because perhaps the former owner has not provided good support or good training and is not motivating people. So those are some of the disadvantages of buying an existing business. So you say, okay, I want to be in business. I'm an entrepreneur. I don't want to start from scratch. I don't want to buy an existing business. I'm going to go with a very well organized package called franchising. Because everything is like, if you want to open a McDonald's Corporation will franchise you. They'll just want capital from you and they'll give you everything, the training, the product, the structure, everything. Now, franchising has its own disadvantages. It might be too structured. You may not be able to do anything other than what you're told to do. It's like I just came back from a trip in Singapore. What a beautiful first world country, but it is like completely structured. Every form of business and existence in Singapore is structured for every citizen over there. There may be territory restrictions in franchising, whereas if it's your own business, you can sell anything to anyone. You can only sell their products, and on an ongoing basis, the franchisor will want royalty payments. So just keep this in mind as you are looking to start up a business. So just want to set the ground rules here before we get into what I will call the financing part of this workshop. So let's start with the most fundamental, safest way of financing. You don't have to ask somebody else for money. It's your own money. And that's called owner financing. How does an owner finance their own business? Either through the owner's savings, your own savings, or other liquid assets. Or there are many people who will then take out a home equity loan or a personal loan, or they might also use a credit card. The using of a credit card to generate money, you have to pay back the credit card. So that's not a way of financing that I would encourage you to do. And another form of owner financing is it's not coming out of your pocket, but it's coming out of relatives who believe in you and trust you, or it's coming out of the pocket of friends. So all of that is called owner financing. All you have to do is either go to your bank, account and take your own money out, or go to your own 401k or your retirement and you can draw money out, or you can go to a relative or a friend. Pretty simple, easy to understand what owner financing is. Are there any questions, Teresa? So far, it's very straightforward.
Yeah, no questions so far. Yeah, thanks.
Okay, great. So, what's the next uh, way of financing? There are many ecosystems that exist in our economy that allow an entrepreneur to raise money. I'm going to mention four different types. One is business plan competitions, the other is grants, the third is what are called incubators or accelerators. So, incubators and accelerators and plan competitions are all for startups, somebody who's doing something new or creative. And then, of course, what's become very popular over the last 5, 6 years is crowdfunding, is using social media and the internet to do crowdfunding. So I'm going to go into each of these, and I'm probably going through some of these a little faster than I would and spend more time on when you're going into debt financing or equity financing. So, business plan competition are competitions that universities run. So, for example, I've listed about five of them, and the examples I'm going to give you are examples that are applicable in the Commonwealth of Massachusetts and in New England. However, you don't have to restrict yourself to business plan competitions from MIT or the Harvard Business School's New Venture Competition or Babson's entrepreneurial competition, Boston University, UMass. If you are an alum of, say, University of California or University of Illinois or New York or New Jersey, any of the 50 states, you can just go into that university's website for the services for alum, and you can see what they offer by way of competition. I've just listed a few here. These are examples. And then, so the way a business plan competition works is you look at it, there's a deadline by which you have to submit. It's like you're not on TV in Shark Tank, but you're basically getting into a Shark Tank in this competition. Organizations also offer very specific business plan competitions, and they'll pick the top 3 or 4 or however many awards they give out. And these are annual competitions. So, for example, Draper conducts a competition, but it's only for women entrepreneurs. There is an organization called the Global Student Entrepreneur organization, which gives out awards. So all you have to do, if you find it, like, I'm sure the question may be in your mind, well, how do I find out about this? Where do I go? Just go on the internet, Google, just put in MIT $100,000 entrepreneurship competition, and it'll come up, and then you can look at the details. You should check out what are the requirements for the competition, what are the deadlines, and what do they need. And you're doing this job of selling your need for funding. You'll have to describe what you need in terms of numbers and money, and that's what you'd put in. Any questions on business plan competition?
No questions submitted.
Okay. Grants. Now, most people think about grants as something available to nonprofits. However, there are grants available, and there's a competition for these business grants. And I'm just listing over here some of them. For example, minority women, there's a Girl Boss Foundation. And I've put the links here because these are not self-evident. So, for example, Alice for Minorities and Women, helloalice.com, you go into their website, you'll be able to look up stuff. FedEx offers small business grants. etc., etc. But the last two are very important from the standpoint of grants, and just make a note of that. One is many states, and if you're from Massachusetts, you can look up state grants that the Commonwealth of Massachusetts offers. So different federal state agencies um, in their area, and if your product or service is in that area. So for example, if you're in education and you're offering something new and creative and you want a grant, you don't have to be a nonprofit. You could look and see what grants are available for a for-profit organization. And then the last one is federal grants. And if you want to look up what federal grants are available, go into grants.gov or usgrants.org is the website. And go into grants.gov and look at the listing of the active grants that are offered by the federal government. Now, in this current administration, you may have read and heard a lot about grants being canceled or funds not available. It is not true that everything has been canceled. That is not correct. Grants are still available from the federal government. A very specific set of federal grants is something called the SBIR and the STTR. These are small business programs that are related to grants that you can get for technology and for unique, new, innovative solutions and product. Very much science and technology driven. Now, since 25, there was a lot of authorized federal funds and they were shut down. But there are bills that are in Congress that are reauthorizing these. So be on the lookout. Sometime in 2026 or even in 2027, you will see SBIR federal grants becoming more available. Any questions on grants before I go to the next topic?
No questions have been submitted.
Okay. Incubators and accelerators. Now, what are these? I've listed probably the 6 most popular ones in Massachusetts. Mass Challenge. Mass Challenge is an organization that now for more than a decade and a half, they give out money. And what you do is you take part in Mass Challenge, and you can look up their website. And if you win an award, you get money as well as mentoring from Mass Challenge. And that's how people who are very creative but may have no money, either out of their own pockets or from relatives or friends, they can take part in a Mass Challenge competition. It is an annual one. Or, for example, Harvard Innovation Lab is an organization that is located in Alston. They also have, they're an incubator. They will help you speed up getting to market, help you speed up getting your product development completed. So that's another way of that's another area of getting funding. And now crowdfunding. This is all internet driven. I'm sure you have heard of Kickstarter. You may have also heard about GoFundMe. These are tools of getting funds, not just for a business. There are people, for example, let's say someone's having a very significant health problem with one of their family members. They can go into GoFundMe and ask for money from the public. Most of these, the crowdfunding, nobody is expecting you to pay that back. They are just providing money because they like your idea and they want to invest what they're doing. If you go to the link that is at the bottom of this slide under Shopify, I'm sure you've seen the shopify.com. Just look at crowdfunding and you will see many, many sites. So you can do your research. I'm just trying to stimulate your way of thinking about how you can get crowdfunding. Any questions?
No questions.
Okay. So that, what I just described, was forms of funding as an owner of a business or from the ecosystem. So not everything is funding that you have to go to a bank or you have to go to investors. You can do all these other things. So make sure you understand before you exhaust the possibilities from where you can get funding. Keep those in mind. So let's go to the core of the main thing. When we say financing, people talk about debt financing. And debt financing, there are 5 major areas. One is bank loans. And it's pretty straightforward. A savings bank or a commercial bank, you go to a bank and you can get a line of credit, you can get working capital specifically to fund, inventories or your merchandise, your accounts receivable. And of course, there's revolving credit. You could have a standing revolving line of credit so that you can fill gaps in cash flow while you're doing operations, and you pay it back. You pay back the revolving credit. You don't have it outstanding for 2 years or something like that. That's regular borrowing. So bank loans. The second is something called peer-to-peer lending. And if you go to investopedia.com, you will be able to see what are the best peer-to-peer lending websites. So Peerform, Funding Circle, those are examples of peer-to-peer lending. If you're in manufacturing and you need to upgrade your equipment and you want to lease equipment, there are specific organizations that will help you finance your lease. Invoices and receivables financing. So let's say you have on your balance sheet a good amount of assets as your accounts receivable, but you're waiting to get money from your customers. What you can do is you can take some of those receivables and you sell them to a receivables financing company like Bluevine or Fundbox, and they will give you the cash. So these are ways of getting the cash to run your operations. And then, of course, the most important one, if you're a startup and you need funding, and you can't just get, a regular commercial loan from a bank, what you do is you go to a bank that is part of the SBA program, the Small Business Administration Program. I'm going to go into a little bit more detail about this particular form of debt financing. Sorry, before we even do that, I hate to sound like I'm a preacher here, but you have to remember some things when you're talking about debt. There is no any standard form of debt. No one size fits all. You need to make sure you review what is the amount of financing that you have and what are the kinds of options available. And the options are driven by the cost of capital. What is cost of capital? Cost of capital is what is the interest you have to pay on the money that you're borrowing. There are either high cost of capital financing options for debt, medium cost, and lower cost. High cost is payday loans. These are I would almost call them loan sharks. This is borrowing money at exorbitant interest rates. Mezzanine debt or online lending, that's the medium cost. Interest rates are high, but it's a lot less because they're expecting they're going to earn money from you and establish a long-term relationship with you. Lowest cost, of course, are what are called micro loans and also bank loans. So your traditional commercial bank loans are the lowest cost of interest that you have to pay. So just keep this in mind as you're examining your own financing needs. So let me get into the SBA system and how it works. Because chances are, if you're a small business, you'd probably want an SBA loan. So, how does the SBA loan program work? You essentially will go to a bank, which is a bank which the SBA identifies as we will support the loans that this bank gives out. So you're actually borrowing from the bank. The bank will decide based on the paperwork you submit, the financials, your balance sheet, or your projections of cash flow. And if the bank says yes, we'll loan you the money, and it's not going to be a traditional commercial loan, but it will be an SBA backed loan. For us to approve this, the bank is going to do the underwriting, but they will follow the rules of the SBA. And if that loan then gets approved, which means not only is the bank got to approve it, but the SBA has to approve it. Then the bank will close the loan with you, and then you will work with the bank. You're not going to be working with the SBA. The bank behind the scenes will be working with the SBA, but they will help you understand. And also, one other thing is when you're working with Boston Business Mentors, we have good relationships with not only banks who give out SBA loans, but also with the SBA. So the Boston Business Mentor will be able to guide you on how to navigate through with the SBA. So this is how, when people say I have an SBA loan, just keep in mind they're just using shortcut language. The loan is not from the SBA, it's from a bank. So for example, one bank that gives out very large numbers of SBA loans is Eastern Bank in Eastern Massachusetts and Cape Cod. So you're probably asking yourself, well, if this is an SBA loan, why is the bank looking to get an SBA guarantee? And these are some of the reasons. You may want a loan where you want a longer maturity than what you could get from a traditional commercial loan. To do that, the SBA has to buy into the reasons for your loan. The collateral that you may be offering may be inadequate. You may not have enough assets for it to be a collateral. For example, when you get a mortgage on a house, the collateral for that mortgage is your house. So if you're not paying things back, they will acquire a house. So for a business, you may not have enough collateral because you're starting up, it's new. Business leverage, they want some business leverage, they want to stay on top of what you're doing. The lender, the bank itself may have some lending policy limits or legal limits. And of course, most importantly, since you're a startup, they want to minimize the risk. So you have to keep all of this in mind. The maturities that are tied to SBA loans, if it's an SBA loan for working capital, you can have 10-year maturity. If it's a fixed asset, it could be up to 25 years. The interest rate really is between the bank and yourself. And typically, these SBA guaranteed loans don't exceed prime plus 2.75%, which is still higher than what you might be paying for a commercial loan. But and these things fluctuate, just keep that in mind. So when you go to a bank for an SBA loan or SBA guarantee, this is what they're looking for. They're looking for a feasible business plan. They are looking to see that you have the management expertise and the commitment, either with your staff or yourself. They are looking to see, make sure that with the SBA guaranteed loan, will you have sufficient funds to be operating on a sound financial basis? Adequate equity investment. Do you yourself have enough equity investment? Or are you just counting on getting a loan from somebody else? So if you're doing that, then you won't qualify to get this SBA loan. Sufficient collateral. So it's not that it's unending amount of collateral, but they will want some collateral. And the last one is repayment. If they give you this loan and the business produces profit, will you, during that lifetime of the loan, be able to pay it back? So to be eligible, you have to be able to operate profitability. You have to make sure you don't exceed the SBA size standards, and you cannot be involved in a business that is in the lending business or real estate development or speculation or investments. So those are some of the conditions for an SBA loan. I'm going to sort of dive a bit superficially, but quickly. The SBA loans, there's something called the 7A loan program, and this gives you some of the details. The main thing I want you, out of the first column of information, is the maximum loan amount you can get under the 7A loan program is $5 million. Up to $150,000, the SBA will provide 85% guarantee, and for loans above 150,000, provide 75% guarantee. And the maturity and the interest rates are listed here in the middle. This is a lot of information, which when you get these slides, you'll be able to look at them. And of course, subsequently, if you follow up, I think Teresa mentioned the SBA is going to do a webinar. You can attend that, or you can talk to a Boston Business Mentor like myself, and we'll be able to go into details. If you get a real estate or a construction 7A loan, you can get it of up to 25 years. I mentioned that earlier. So besides paying for interest on the loan, there are also some fees that have to be paid. So up to 150,000, they will charge 2% fee. 150 to 700 is 3%, and so on and so forth. A higher percentage fee on loans greater than $1 million. So that's this SBA 7A loan. Another type of an SBA related loan is something called the 504, which is given out by what are called Certified Development Company, the CDC, and these companies you'll be able to identify. We have a list of them, and the SBA has a list. The maximum loan you can get is $5 million. 100% is guaranteed, and it can be used only for long-term assets or fixed assets. The maturity is 10 years for equipment, 10, 20, or 25 for real estate. And if it's a green project or a manufacturing project, you can get 5.5 million, not just 5 million. What are banks looking for? So this is the 504. So there's a 7A loan, and then there's the 504 loan. For a 504 loan, this little chart tells you what are the eligible uses what are the ineligible uses, and other requirements. Again, we don't have to go into the details of this. I'll just look at the central column. You cannot go to a bank and get a 504 SBA loan. You say it's for equipment or for fixed assets, and then you say you'll end up using the money for counseling or fees or equipment that is less than 10 years useful life, or paying franchise fees because you're buying a franchise, or you're having moving costs. So let's say you take a 504 loan for equipment. You can use it for the equipment cost, but not for moving that equipment or relocating that equipment. So those are some of the details related to the 504 loan. 7A loans, 504 loans, SBA guaranteed loans, and then there is another set of loans that the SBA calls micro loans. This is a loan up to $50,000, not the 5 million and the 5.5 million and all of that. These loans, the SBA will provide technical assistance, and the interest rates vary on these micro loans, and you can use these loans for working capital. You can use them for inventory. You can use it for a whole lot of things. You can use it for refinancing your business. So this is a very nice, special, small quantity loans that the SBA can also give you. I'm going to stop here. I've thrown a lot of information out at you about debt financing and loans before I get into equity financing. Any questions on loans?
No submitted questions.
Sorry?
No questions have been submitted.
Oh, okay. All right. So then let me go to the next category, which is equity finance. So there's debt and equity on the balance sheet of any company. There's all of that. So how do you get equity financing? There are many different ways. One is a partner. You bring somebody else into the business who wants to be a part owner of the business. So you're not the only owner, you're a partner. Another equity form financing is another company. So instead of an individual, you have a company. You can go to the public market, fundraising market, and do an IPO, which is an initial public offering. Or you can go to the private market, not the public market. And in the private market, there are 3 different types of equity financing you can get. You can get it from what are called angel investors. You can get it from VCs, which are venture capitalists, or you can get PE, which is private equity. I'm going to go a little bit more into some of these so that you understand what this means. If you're an early startup, other than friends and family and possibly angel investors, some of this stuff here will not apply. But if you've been in business for a while and you want to raise a lot of financing, these are some of the other areas where you can go to get money. So angel investors in the Boston area and nationally, there are some well-known angel investors. These are some examples. So all you do, again, just Google Boston Harbor Angels, Thai Boston, Cherry Stone Angel Group. Some of these may not be, the headquarters may not be in Boston. They might be in New York City or in Philly or even on the West Coast. But these are examples of people, very rich people, who are interested in investing. And they do this, they're not giving it away. They're expecting a certain return from your business when you make a profit. So those are angel investors. Venture capitalists and private equity. Many people mix up what these are. There are some differences between the two. One is the kind of company that VCs invest in versus private equity, they might be different. The amount of capital they invest also can be different. Probably the last one, the last point is probably the most important. In a company's life cycle or in a company's product life cycle, when they get involved, also differs. Venture capitalists may get involved much earlier than private equity. These are some examples of venture capital companies in the area. So they're all well known and they will invest. And one thing I'll tell you, when a venture capital company invests in you, they really get involved with your operation. They will tell you what to do, they will instruct you, they will not just sit idly by. They won't be idle like an angel investor might be. Private equity, these are examples of some private equity companies uh, that are in the in the Boston area, and you can look up and talk to them. One thing about venture capitalists and private equity, it's not just looking something up on the internet and going to them. You have to get involved with them through a network. So it has to be by word of mouth. You've got to have a connection, and the connection, the go between a broker or friend who has exercises a lot of influence in the private equity investors or in or the venture capitalists. You have to make sure you get to know them. So it's a lot more work, a lot more pounding the pavement, not just on the computer. That's pretty much the highest level of information about financing. I just want to share some statistics, a couple of slides on sharing what happens with startups. You should know when you're looking for money, startup entrepreneurs usually, most of the startups in the US, they are funded with personal funds. 63%, this is a statistic, um, comes from personal funds. And then you can see some of the other 27% comes from income from another job. Some people borrow from friends, donations, investors, grants, crowdfunding. 42% of entrepreneurs started with less than 5,000 cash. 49% started with more than 10,000. 24% started with more than 50,000. So a lot of people, when they're starting off something new, don't have a lot of cash and they look at other ways of getting it, which is why it's important. Again, please don't be discouraged. It doesn't mean you can't get the money. You just have to know where to go and how to sell your ideas and do your pitch correctly. And then the other statistic, which is good to know, is when you want to expand and buy more equipment or supplies or marketing, um, and you go for outside financing in the first year of operation, um, where do you go to looking for financing for these kinds of activities? So most of them are for purchasing equipment or purchasing inventory. Quite a few also use it for marketing because they feel we have the product, we have the ability to sell it, but now how do I get the word out? So to do slick, improved marketing, a lot of people in the first year go to outside financing. And I'll pause and see if there are any questions. This is a slide that when you get the slides, you can look at these QR codes and you can get a mentor to help you and work with you. you can definitely reach out to Teresa. She is our coordinator for all intake, and she will communicate with me and connect me with you.
Okay. Well,
So,
thank you. Oh, sorry.
sorry, that's all what I have, Teresa. Any questions?
You know what? I don't have any questions, but that doesn't mean somebody won't come up with a question later. So please feel free to email us. You have our email address from your your join link uh email that you receive. So you can reply to that. Let us know what we can do to help you. And thank you, Ramesh, for giving your time today to explain all that really important information. And I will just tell everyone to watch for that follow-up newsletter. It will have the slides, so you have all the sources that he talked about. It will have the recording. It will have the upcoming SBA presentation. And I did mention that other presentation. I'll have information for you on that one as well. So watch for that. All right. Thank you, everyone. And have a good rest of your week.
Thank you. Thanks, Teresa.
Bye.